Hi there, welcome back. You're watching Closing Trades right here on ET. Now, Gaurang Shah joins in with his perspective on the markets. Gaurang, good to have you on the show. Do you think for some time to come through the earnings season, we'll be perhaps laboring in a 50 to 70 point narrow range for the market between roughly 5,600 to 5,700?
I strongly believe that, and I guess any directional on the upside, possibly what one was expecting was a preemptive move by the Reserve Bank of India before the 30th October date. And of course, the statements made by the Finance Minister that it's time for the RBI to act, etc., etc. But given the data points on the inflation that we had a while back in the morning part, that looks a little bit difficult as of now. But yes, the direction of the market, like you rightly mentioned, Tanveer, 56.50 on the lower side is what we are working with. On the higher side, because of maybe earnings season, if there is some shade better, we might possibly go up to 57.50, even make an attempt towards 5800. But again, a lot will depend, and of course, the noise from the Europe will also give us a little bit of direction. So as of now, we will possibly be focusing on the earnings seasons, and I guess the earnings season is going to be a mixed bag. You will have a couple of performers, you will have a couple of underperformers, so we need to watch out on that.
What are you expecting from Reliance later today?
Well, as a disclosure first, Tanveer, we have a hold on the stock, and our target is very close to that buyback offer of about 870 odd. GRMs will be better, like all of us have been hearing since morning. The GRMs could be a shade better. Petchem is where we'll see a little bit of strain coming in. And of course, a lot will depend upon what the company has to say in terms of output, which has been sluggish for a while now. So broadly speaking, I think 800, 780 is the lower end of the band where Reliance would possibly trade. On the higher side, somewhere close to 870, 875 will be the kind of ceiling. So it's a range of about 80 to 100 rupees. I don't think there's going to be any major outperformance.
What is the call on TTK Prestige after CLSA downgraded the stock? I mean, I know you would not be able to comment on the brokerage view, but given the valuations at which TTK Prestige was, this was not entirely unexpected?
Yes, totally unexpected. And I think, Tanveer, if you talk about the space, I think you need to be very, very choosy as to where you want to go and put your money. And remember one thing, anything that has gone up, and in case if there is some disappointment, whether it is on the earnings season or whether it is in terms of downscaling of target, etc., it is going to react on the stock on the negative side. So you need to be a little bit careful. Well, as of now, we don't have a coverage on the stock, so it will be very difficult for me to comment. But yes, you need to be cautious and careful if you are taking a initiative and buying the stock. So I feel that it is a little bit stretched out.
In contrast, we're looking at other counters from the FMCG pack, Dabur, HUL, ITC making 52-week highs. How would you trade them?
We have a hold on ITC. We have advised to book part profits on HUL. Godrej Consumer is the other name, Tanveer, where we feel that there could be a potential upside even from the current levels. The stock has been consolidated for a long time. Likes of Dabur and Marico, yes, there will be definitely some more upside. And if I have to just go by the numbers that these companies delivered in the first quarter this fiscal, I guess this time around they might be a little bit better. The problem is with the input cost, because names like HUL and ITC, a large part of their input is in form of agri commodities, and if that is going to scale up, then whether the companies are able to pass on to the end consumer or whether they are going to take some kind of a hit on the margin, that remains to be seen. But this quarter, I think they will be better off. Next quarter is where we'll have to watch out for.
Okay. What about a couple of these stocks? In fact, we're talking about results, Ashwini. What about Reliance Industries ahead of the numbers?
I think Reliance has corrected substantially, and I would think that from here, over the short term, risk reward is on the upside. Maybe keep a stop about 805, 810, and it could head back towards 860 over a period of time. It's corrected quite a bit from 880 down to almost 810. So I don't think results are going to really take it down unless there is some big disappointment. But chances are that results may make the stock move higher because results generally just accentuate the previous trend. They don't really make or break the trend.
Some updates on Maruti there. No connection really to the stock price movement. It's really something against the workers. But amongst the top losers on the index today is Maruti Suzuki. Mitesh, is there a trade here? It's down close to 1.5% to 2% in trade. Maruti Suzuki 1345. Is there a trade here? Mitesh, this is for you. No, I don't think Mitesh can hear me. Ashwini, coming back to you then. Maruti Suzuki 2% down. Is there a trade here?
I think Maruti is probably coming out of a big bear market, and again the stock is corrected to its 20-day moving average, and given the strong trend, this correction should be bought. Probably keep a stop about 1300, and chances are you will get to 1550 once the stock starts moving up again.
Okay, let's just look at some mid caps in trade. And we were talking about how technically some of the mid-cap cement stocks, or fundamentally some of the mid-cap cement stocks have shown strength, a couple of them on the charts as well. Gaurang, have you guys at Geojit done some analysis on how some of the mid-cap cement companies are trading in terms of the EV per ton valuation, and thereby from a 6-month perspective, is there anything that you're advising clients to buy into?
Well, not the mid-cap side, Neeraj, but definitely we have coverage on Ultratech where we have recommended a hold. Names like Ambuja, ACC, and of course Shree Cement. I think recently they made a new 52-week high. And in terms of the consumption theme, if I just compare the month-on-month numbers and of course the slack season, which is the monsoon period, this time around to last time, I think the numbers were much better than what the street was expecting. Secondly, reforms in the real estate and infrastructure, if the initiative will be taken up by the government, then the consumption theme is again going to go up. The second thing that will support is the affordable housing theme. Third one, of course, what remains to be seen is the input cost. Of course, this time around has been quite stable, therein by, of course, improving the margins. Any kind of uptake per bag price will definitely improve the visibility. But then again, there is a issue with the government policies. In case if they come back and they freeze the prices of the cement bag, that could lead to a little bit of negative impact and an overhang. But overall, we believe that the performance which was there over the last 2 or 3 months will definitely continue. And one should look out for the triggers in terms of government's reform policy in real estate infrastructure. Numbers, I believe, Neeraj, the cement pack will definitely surprise on the positive side for the second quarter.
Okay, that's a point well taken. Yes, watch out for some of these stocks. TTK is down 4.5%. We're just looking at some losers as well while we talk about the gainers. And though we discussed TTK with Gaurang, that one is amongst the top losers. Federal Bank has come off quite a bit in today's session, so that's down. And Jubilant Foodworks is the other one which has come off a little bit from the day's trade. Ashwini, on the charts, TTK Prestige, it's down 5% now, so close to 15% shaved off in a matter of 2 days. Can it still slide down further?
It's early to say that the bull market here is over, because at many points people will say that things are overpriced and they keep going higher. I mean, this is probably the third time in the last many years or during this whole bull run that it's probably going to come and retest its 200 DMA. Now, I don't know whether the bull market here is over, but if it stays below 3100 for an extended period of time, say 2 or 3 weeks, then you should expect that something is probably changing. But no point taking a hurried view that the bull market here is over and should keep moving lower. I think it will continue to remain in that 2800 to say about 3600 type of band.
Gaurang, come to you from an earnings perspective. What would be your top recommendation right now?
Yes, Tanveer. So, private sector banks, I believe Axis comes out with the numbers. We saw the numbers from HDFC Bank. So, Axis, ICICI, on HDFC Bank, we have a hold. On Axis, ICICI, Yes Bank and IndusInd Bank, we have a buy, and I guess we recently upgraded the target for IndusInd Bank post the numbers, which were much better than what the street was expecting. Mid-cap IT, we believe, will definitely do better. Names like Persistent System, Mindtree, CMC Limited, Tech Mahindra. Spoke about cement. I think frontline names will definitely do better, but yes, you need to keep names like Shree Cement and Ultratech also on your radar. FMCG and mid-cap pharma, I believe that they will also contribute to a great extent. There will be slight disappointment in aviation, real estate and metals, but over there, we believe that name like Tata Steel in the metals pack, close to about 400, 410. I think most of the negatives which were there have been priced in, and there could be a limited downside. So we have a buy call on Tata Steel, and we feel that in the metals pack, Tata Steel would do a little bit better than some of the other names in the metals pack.
Leave it at that, Gaurang. Thanks so much for taking the time out and joining us on this leg of closing trades and giving us your view. 2:55, that time of the show, we get in the mid-show trading ideas from both Ashwini as well as Mitesh. Mitesh, anything that you scanned in the last 15-20 minutes?
Neeraj, I think, I've been liking the sugar stocks. Balrampur has one, for the timing kind of moved up, but I think Renuka, I'm waiting for the stock to now start trading above 37.25, 37.50. So if that breakout happens, would suggest buying it with a stop below 36 for a target of 41.
Okay, Ashwini, what is it that you're recommending in trade?
Well, I think some of these smaller banks are doing extremely well, so maybe we'll look at Orient Bank with a stop about 290 and look for targets about 315 here.
Okay, before we take that break, just one quick word really. Mitesh mentioned sugar. The stocks are doing well. Balrampur is the top gainer. Mind you, there's a report from Jefferies on Balrampur Chini today, wherein they have raised the FY13 EPS estimate to 10.8 rupees, which takes their target on Balrampur Chini to 87. They've upgraded this from 75 to 87. The stock currently amongst the top gainers, 4.5% higher in trade. So amongst the sugar names, this is the top gainer in trade. Good going for Balrampur Chini. High chance, of course. They are primarily basing their estimates on a high chance of a sugar deficit in the current season. What they're saying is that all the reforms that have been announced are only additional catalysts, but the deficit that will be happening will be the principal reason why they believe the stock could do well. A target of 87 is what Jefferies has laid out for Balrampur Chini. So good going for this one. Let's take a break on that note. We come back, hear out a few other voices, get in Sandeep Wagle with his mid-show trading ideas, and of course get in a brokerage view on an active stock which came out with good numbers as well. All of that in just moments from now. Here out in meanwhile, you are but MD of Dalton Capital Advisors.
Today, I think they have, because of equity injection by private equity investors and the like on various projects. So they are not actually having such a huge liquidity problem, but there is certainly a problem of offtake. Retail home buyers are taking their own time, making up their mind. I think the uncertainty was at its peak, and that is when people hid in sort of FMCG sort of stocks because local demand will continue to be very strong. But I think now that sort of the last bullet has been fired as far as monetary easing internationally is concerned, so I think people are looking at further money coming in because of all this monetary easing going on in Europe and US. And so therefore there is a perceptible shift to the cyclicals now from the FMCG sector. I think there is certainly some amount of value left in the private sector banks, and that is probably where new money is rushing in. You need to also take some bets on the infrastructure story, because that is where if there is some government action going forward, that is where I think the value creation would happen. Activity on the digitization front would certainly benefit quite a lot of these stocks. There is no doubt on that, but they are still some distance away from even making a profit.